Could the S&P 500 have already seen the highs for 2017 without a continuation year-end rally? It is possible, I'm not quite sure, but I'm holding a special webinar on November 6th to update people on my fourth quarter outlook, some of the things that we're seeing tactically, because we do think there's going to be more selectivity heading into the end of the year. So you can sign up for that free webinar down below. Right now, let me show you a couple of charts that are showing to me some concerns why the broader indices, especially S&P, may be exhausted, but there should be some upside still left in other parts of the market.
So just from a pure trending perspective, it is quite uncommon to see such a low volatility environment through the months of September and October like we saw this year in 2017. Usually see a spike in volatility, at least one. We didn't see one this year. In fact, by my estimate, we've seen the lowest September-October period just about ever. And that's a long time. So let's have a look at this. So given that, it is not entirely unfeasible in my mind to think that the entire rally that we just saw, basically from the October lows into right now, may have already been the year-end rally, just to kind of keep that in mind. Even though we do think we'll see pockets of strength into year-end, and again, for that, I'd like to welcome you or invite you to our fourth quarter outlook on November 6th. More on that in just a second, or our update in the fourth quarter. But let's have a look at a couple more charts. Now, the first chart in this is what we call the XAL. This basically is an index that represents the airline stocks. And what you can see is that even though this thing is still trending very nicely, we're starting to put in a bottom here, which through the lens of technical analysis is quite toppish looking. And if the airlines are topping out and they're going to start weighing on the market, then the transportation stocks as a group, of which the airlines are part of course, will also stop to go higher. So this could then indeed start weighing on the broader market. Those are the first two charts. And then the third one, which is on a different part of the market, but on a very important part of the market, is what we refer to as the semiconductor stocks, or the SMH ETF representing semiconductor stocks. You can look at different ones. But here too, we see that unbelievable low volatility push higher, and it just looks like the year-end move may already, or at least a good part of the year move may already be baked in, which then indeed too, if that's the case, that's also less ammunition left for the S&P 500 to go higher. So with that, again, I would love to have you attend our fourth quarter update. So this is not the initial the outlook webinar we already did in the beginning of the fourth quarter, but an update to the fourth quarter themes. We're going to talk about what the sectors are we like, what the individual groups are, even some single name stocks, what has changed in the month of October, and so on and so forth. So that's November 6th at 4:30 Eastern Time, 1:30 Pacific. Hope to see you guys. You can sign up for that in the link down below.